Brian Sponheimer is portfolio manager at Gabelli Funds. Brian, it's great to have you here. So we've seen actually some outperformance among the auto parts retailer names and that kind of thing. Is that what you're talking about?
It's a little bit of the auto parts retailers like an AutoZone and O'Reilly, but I think we can start with the auto dealers. So companies like AutoNation and Penske are companies that would be net beneficiaries or at least would be hurt less by some disruption within the new vehicle market if we were to see production go down in North America. So just to put some numbers behind this, in North America, there'll be about 16 million units produced this year. About 10.4 will be in the U.S., 4.2 in Mexico, and the remainder coming from Canada. The dealers really don't care where necessarily the cars themselves are coming from, but the beauty of the auto retailer model, the dealer model, is that they generate about half of their profits from parts and service. And as we see vehicles get more complex, if consumers aren't buying new vehicles, they're going to need to get those vehicles serviced. So this company like AutoNation, based in Fort Lauderdale, the second largest dealership group in the country, would be less hurt, terrific cash flow generator, and a company that we like.
Yeah. CarMax as well. I mean, I was just going to call that one out because that's an individual. That was our mystery chart. It's also interesting, Brian, because you do a lot typically with the dividend and income trust funds. So you have to think through, tariffs and the impact on the auto sector on the one hand, and then kind of figure out, from a factor position, how the market's going to be treating these stocks as well.
Yeah, there's a great substitution effect. If consumers aren't buying new, they're going to look to the used vehicle market. And a really interesting dynamic with a company like CarMax is that the cohort of the market that they really excel in is the 1 to 5 year old car population. And if you think back to COVID in 2020, that population has declined and is going to inflect in the middle part of this year. So they may get the double boost of consumers looking to the used vehicle market in a market where supply is going to come back. So that's something that we're looking forward to in the back half of the year.
And quickly on Dana and Garrett, those are two more of the names you're watching. Why?
So within the OE supply space, these are suppliers that help make the vehicles. Dana, which is based in Maumee, Ohio, is a producer of driveline for light vehicle, off-highway, and commercial vehicle equipment. And it's a catalyst-rich stock. They're looking to sell their off-highway business. Stock's trading around $13. We think after they sell this business, you're basically buying the rest of Dana for about $2 a share for a stock that's trading around $13. That's really attractive to us. A company like Garrett Motion, which is the old Honeywell turbocharger business, is about a $1.9 billion equity cap company that really, in kind of a worst-case scenario this year, is going to generate around $250 million of free cash with a great balance sheet, and they're buying back a lot of stock.
Yeah.
And if we think about the EV market maybe being in an area where there's a little more pause from a consumer standpoint than there otherwise would have been, consumers are going to be driving more internal combustion engine vehicles. And so the length of time for the life of the turbocharger market is going to be measured in decades. So another name we like.